All right, what is up, traders and tycoons? Super excited for today's video. We're going to talk about the rate of change and how to use the ROC indicator. All right, so some of the key points is we'll go over the basics, how to interpret it, the zero line, divergences, and then combining it with something like moving averages. And then we'll talk about how to use it with volatility and how it's got time frame flexibility. So good video today. Be sure to smash the like button, subscribe to the channel if you guys are new, and we'll get straight into it. As always, the content provided on this channel is for informational and educational purposes only and are not intended to be relied upon as legal, financial, or investment advice. So please be sure to read through the disclaimer, and we'll get right into it with the basics. The ROC measures the percentage change in price from one period to the next. It's a tool that gives us a clear sense of the momentum or speed of price movement. So we can see our candlesticks up here, and we've got the rate of change ROC indicator here on the bottom. Okay, and to interpret ROC, a rising ROC indicates increasing momentum. So we can see here where the rate of change is increasing here, and also the price of the stock is going up. All right, and then here we see the stock is going down, and also the ROC is in a downtrend. The rate of change is in a downtrend. So, that's the very basics of how you want to use it and interpret it. The zero line is going to be this line right here on your chart. Okay, and so when the rate of change is above zero, it indicates bullish momentum. And you can see here, once we cross above zero, look what the stock does. Okay, the stock actually starts going bullish, starts trading more bullish, and it is trading in an upwards direction. And then when it's below zero, it's signaling bearish momentum. You can see once it crosses back down below zero here, it starts going in bearish momentum and a bearish trend. Now, divergences, if you're not familiar with those, it's a very simple concept, and it just takes a little bit of getting used to. But after you practice for a little bit, you'll be able to spot these. So let's say if the price rises, but the ROC falls, we might see a bearish divergence. Now, the opposite is going to be a falling price with the rising rate of change. That indicates a bullish divergence. So if that still doesn't make too much sense or sounds a little too complicated for you, we're going to make it really simple real quick. Okay, so take a look how we have a high right here, and then we have what's known as a higher high. So stocks tend to make higher highs, higher lows, lower highs, and lower lows. So here we're making higher highs. The ROC makes a high, and then it makes a lower high at the same points here. So we're seeing a divergence where we're creating lower highs on the ROC, and then we're creating higher highs on the price action. In that case, it would be a bearish divergence because the rate of change is showing a bearishness right there. Okay. Now, you can start to combine the rate of change with moving averages. That's basically one way to combine it with another study set, right? So, it's good to have different tools at your disposal, all right? Trading is often like going to battle, like going to war. So the more tools you have at your disposal, the more weapons you have, the better odds of success you have, especially when you learn how to use those weapons properly. And so, to make things simple, if you combine it with a moving average, it can smooth out the signals. This combo can help identify clearer trends. Okay, and so if you take a look here, all right, what we're going to point out is, again, those divergences where we have the high, we have the higher high, and we have the high, we have the lower high. So we're using it to spot out a potential bearish trend right here and a bearish divergence. But what we're actually going to do is use the simple, we have the 3 moving average and the 8 moving average right here. So the 3 is in blue and the 8 is in purple. This is a simple moving average crossover strategy. And what we're going to do is we're actually going to wait for, a bearish signal here, for a bearish crossover on the moving averages, right? So we see the initial bearish divergence forming here, and we're going to wait, right? We're going to wait for some confirmation. Because if you notice, there's been some bearish divergence building, right? Even here and here, there's higher highs and a lower high there. But we really didn't get any type of bearish divergence, okay? Or we had bearish divergence, but we didn't really see any bearish momentum here. We saw that the stock actually continued to rise. So we're spotting the bearish divergence. We're looking for some signals. And you can see that the blue line does cross down below here, But what do the candlesticks do, right? Well, they actually start trading back up above the purple one, and the blue line crosses back up above bullish. Well, here, when we're combining the strategies and we're waiting, we see that we get the signal here and it crosses down below. So this is a bearish crossover on the moving averages. And then we have the bearish divergence that we highlighted. And now we're looking for a rejection of the purple lines. Okay, so we got the bearish crossover. We start trading below. We come up and we reject the purple line now. And now we should be in a bearish trend where we continue to hold the purple and the blue line as resistance above. And this can be your confirmation to try to swing trade something potentially to the downside in this example based off the bearish divergence. Okay, so that's basically one way to combine it with another indicator. There's many other indicators, but in this example, we're just combining it with some simple moving averages. Now, when you see a high rate of change values, that can hint at overbought conditions, and on the flip side, low values can suggest oversold scenarios. So what we're looking at here is we see that we have the rate of change hits a peak at this level right here, right? It hits a peak right around here. It continues to go higher, all right? And the ROC starts to go down. So there's a little bit of a bearish divergence. But what I want to highlight is, this is basically an extreme condition, right? A very high rate of change level right here. So if you were to just draw a horizontal line and put this as a level, you know that this is going to be basically a peak, right? And you're going to look to see if this can be a future peak in the ROC later. And you can see here, when we get this really strong push up, we actually come right back up to that peak, okay, to those overbought conditions. And what do? We start a very hard sell-off afterwards. So, that's one way to kind of use it from a volatility standpoint and help you spot potential overbought and oversold conditions. You can see here, it's extremely low, right? It's lower than it's been the entire period. And we end up rallying out of that after hitting those lows. And then we come here to the peak and we start to see a decline back in the price. Now, it's got time frame flexibility, which is one of the favorite things that I like about it. You can use it on the daily. You can use it on the 1 hour. It's adjustable for various time frames. So this makes it suitable for both day and swing traders. So you can use this intraday to spot some intraday trades, and you can also use this on the larger time frames to spot some swing trades. All right, so it's very nice from that perspective, and that's definitely one of the things that I like about it the most is the time frame flexibility. Now remember, practice makes perfect. So before diving in, you want to practice using this indicator on a demo account or paper trading, get a feel for it and understand its nuances. The main thing also I want to highlight is practice focusing on, fewer stocks, right? You don't necessarily want to, try to trade every single stock every single day. If you can narrow your list down to 3 to 5 stocks or less, and really understand how, your strategies work on those specific tickers, and you can understand how those stocks move in specifics related to some of the other stocks and what the ROC indicator looks like on those, then you have a much better understanding of how those are going to move, how they've moved in the past, and what you can expect to potentially see in the future from them. Okay. Now I do want to mention, if you guys are new to the channel, I did actually start a completely free newsletter called Investment Intelligence. It's a really good newsletter giving out free valuable finance content related to all of the different markets, related to option strategies and different things like that. I also try to put out free trade ideas. This was one on Tesla, and we're basically highlighting the conditions that we have on the chart right here, going over the trade idea, and that one played out very nicely, went up very, very nicely, especially if you trade options. So sign up for that newsletter. There's a link in the description. I do want to mention I do one-on-one coaching, one-on-one personal sessions every single week. You can book those directly through Ko-Fi. This is what the Ko-Fi page looks like. You just come over here to the commissions tab right here, and that's where you can book a 30-minute or 1 hour session. You can also request a specific YouTube video on Ko-Fi. So if you want, I can make a video on the topic of your choice, whether it's a analysis video, technical, fundamental, whether it's maybe a little bit of a tutorial or a strategy walkthrough. You can come in here and request a YouTube video, and I can go ahead and basically be able to see it on Ko-Fi and be able to get that for you as soon as possible. And if you ever enjoy the free valuable content I put out, you can always click on this buy a coffee button, and it's basically a way to leave a tip or a donation for the free valuable content I put out. Thank you guys for watching the video. Don't forget to smash the like button and subscribe for more.